All right, so welcome back in. Today we're going to be diving into crypto payments, transfers, and the whole money aspect of moving decentralized payments cross-borderless. There's a lot happening in this space. I think a lot of you have probably looked at different kind of technologies. Today we're going to dive into one that I think is very interesting. My name is Paul Barron. Welcome back to TechPath. Joining me today is Ivan Tomic, who is the CEO and co-founder of SafeGram, which is a company that's doing a crypto-to-fiat bridge, but you're also getting into some ATMs. There's a lot happening with SafeGram. So Ivan, welcome to the show.
Thank you very much, Paul. Thank you for having me. It's a pleasure to be here, and look forward to answering all the questions that you have.
First of all, before we get started here, I want to learn a little bit more about SafeGram, kind of the overall mission. Explain for an average user, someone maybe who is not familiar with this and or this market, how you would explain the mission for SafeGram.
So SafeGram has been built as a decentralized solution for all your needs. Now, it might be a broad answer, but basically everything that related to crypto and even the regular, monetary system needs, we're building an ecosystem to provide solutions for that. That means from a crypto to fiat bridge, which is basically our solution for the market in the blockchain industry, to providing ATMs for the masses as well through our physical presence around the globe, and also decentralized exchanges that we're building, SafeDex, and our SafeStarter, the launchpad as well. So
cool.
those are some of the things that we're doing, not only for the blockchain industry, but also for the common users at large, to be able to have one mutual ecosystem where they can actually participate, learn and grow and educate themselves in crypto.
Yeah, I was looking at the website. Pretty
Sure.
simple on the C2F bridge here, and
Yeah.
I think in the vein of what we've seen from a competitive landscape, one thing that is always brought up around crypto is the emerging markets. So we've got everything from the amount of money that's moving into Nigeria, a lot of the countries in South America that have kind of built the ecosystems. We see a lot of money moving across, and Western Union has kind of been the one app that's been out there. High fees, slowness. It's a very lethargic old Web 2 model that has been around for quite some time. MoneyGram, same kind of the same thing. This has been kind of the killer app of Bitcoin and the use case that has really kind of placed blockchain, I think, on the forefront, especially in money services. When you look at that from the idea of the emerging countries that really kind of focus on this, but also now the ability to move in Western countries as well, almost as efficiently as me sending or using something like Zelle or Venmo or things like that. Do you see that as the bigger market, or do you feel like the emerging markets are going to continue to kind of excel in this area?
I think the emerging markets are definitely the bread and butter of this type of a system, because a lot of the cross-border remittances are flowing from U.S. or from
Right.
first world countries into the third world and emerging markets. But that can be reversed. So if you look at the trends between inflow and outflow of each country, they're stabilizing over time, but it's still mostly a one-sided deal. However, you still need to be able to cash those things out. So you need to use, like you said, Western Union, MoneyGram, those type of services in order to actually send, to process payment, whether or not you're sending to your brother or your cousins or family, or maybe just a B2B, to a business that you need to pay off or pay a bill. So
Right.
I think, in terms of what we're able to accomplish is, if you look at places like India, which have a very, they have a lot of crypto users, but at the same time, they don't have a developed crypto off-ramping solutions in India itself to an extent of what we're trying to do. I think for us, based on what we're doing, and I will just maybe touch upon this later in the interview, but solutions that we are providing are not just digital, but they're also physical to digital fusion of solutions, meaning that we're also going to be providing a large number of ATMs that are specially developed for SafeGram across the globe. What that means is that we're replacing regular brick and mortar, financial institutions, or at least working alongside with them to minimize the footprint of these financial institutions and still provide the users with the ability to tap into everything that a regular financial institution could provide on a regular basis. Now, obviously, that doesn't replace, users like if you need a loan or something, but it does replace a regular interactions with ATMs or just tellers, so to speak.
Right.
So,
Yeah.
yeah.
All right. So Ivan, here I was looking at your deck here. Market evaluation, market availability, your total addressable market right now about 1.2 trillion. And then when you look at the potential revenue on 5% transaction fees, setting in at around 39 billion, these are some large markets out there. Obviously, in the growth of this, what do you feel is driving the growth around this component itself? Because I would think that the market has not really moved that much. What's shifting it, I guess, differently than maybe what we've seen in the past 5 years?
Well, I think the fact is that there's a large movement in migration of workers, so to speak, in the last even
Okay.
10, 15 years. But that's been, slowly stabilizing within first world, third world, people moving from Africa into Europe, vice
Hmm.
versa, into different areas. Even people that are, moving from, some of the Southeast Asian countries into U.S., for example, to study and abroad and finding finally jobs maybe within the first year or two, and then basically sending some money back home. So
Yeah.
and whenever there's a movement in something, it needs time to mature, whether it's 1 year, 2 years, 3 years, 5 years or more. I think those are some of the main elements that you see what's going on. You clearly understand some of the movements that have been going on in the industry, and it's just not in the industry but the whole global market in the last even couple of years, and people are moving more to working from their homes, so they don't have to be uh, in particularly in one place. They can move around, they can be mobile, they can be digital nomads, still get
Yeah.
paid. They still need to basically cash something out, whether or not to pay themselves to pay the rent or send money to their grandmother or a family member, like I mentioned, I
Hmm.
believe before, or just pay some bills. So all of those things are playing a huge role in the increase of this, and it shows mobility in the total market.
Let's look at, okay, so ATMs is going to play a role in this. You guys, what's the timeline
Yes.
on getting the ATMs to market for this,
Well,
for SafeGram?
the projections that we had were a little bit in earlier than we hoped. We wanted to get them out in the second quarter of 2022. However, with the market changes with the in crypto and everything, we have moved that timeline to the quarter three of 2022 and beyond.
All right.
We'll slowly roll them out because we need a little bit of that on ramping process to get everybody on board to understand the schemes. But basically, we're looking to mass adopt these rather quickly, throughout the global markets. And when I say that, we're not talking 2030, we're talking in the hundreds and thousands of them.
All right, Ivan, so explain to me how all the service fees kind of break out, whether it's on the crypto to fiat bridge as well as the ATM side. How do the fees break out? What would a user get exposed to? Kind of explain that.
Sure, yeah. Our crypto to fiat bridge is what powers both the send money services and the ATMs, which are part of the send money services. So, send money service is an umbrella for that encompasses the crypto to fiat bridge used by the digital, gateway that we have on our site, and it'll be also pushed out online through a mobile platform in the next coming weeks and about a month, I would say, out. And we also have the ATMs. Now they're all running off the crypto to fiat bridge. Now the fees that we do have on both sides of the aisle are basically getting collected, and then 80% of those rewards off of those fees, pretty much, almost the entirety except the 20% is being given back to the partners and qualified community users, meaning stakers and liquidity providers. What that means is that the partners and partner projects, and even teams or anybody that has a partnership with us, it will be enjoying some of the passive, incomes from the transfers fees, and also the community itself will have I would say a huge, gargantuan amount of rewards coming from the actual bridge. So we don't get to keep really almost anything. It's just for R&D and marketing purposes. What's really good, even about ATMs, is our ATMs are running between 2 to 3.5% fees. If anybody understands what those fees are in crypto, any similar crypto ATMs, they're running at X3, X2 at minimum, and even higher
Mm-hmm.
than that on the fees. Sometimes even X5. So we're literally you have a traditional fee structure imposed on the system that not only does that, but also provides rewards back to the community. Whereas other ones, I'm not, not to mention some in particular, but anybody that understands crypto and you don't get those rewards back.
Yeah.
Okay, you don't
Yeah.
get to enjoy any transfer fee benefits, meaning that yes, and on top of that, you have to put your money into those systems, and then they give you
Mm-hmm.
some type of reward system a little bit, but your money's locked up. We don't hold your money, and we're giving you everything back. So if a person's smart enough or a user smart enough, they're gonna basically participate in a system like this, which actually is gonna give you a lot more back, and the more people are using, the bigger the rewards are, and that's simple as that.
I want to get into your SafeDex here. I was on your
Please.
website, concept behind SafeDex, build a powerful exchange. Explain SafeDex and what kind of services is going to offer to users.
Okay, the SafeDex itself does offer a very unique, capability and features to the users. That means that if you guys are familiar with Curve Finance, or anybody is
Hmm.
familiar with Curve Finance, a lot of people are. Some people do not know there was a lot of what you would call a curve wars, meaning that people were fighting over the best pools to be in. So they would basically, you can call it duke it out in terms of which pool they want to be in and who's going to be the primary recipient of all the rewards that the
Right.
Curve Finance is providing. We essentially paid homage to Curve Finance. We paid homage to also the systems such as PancakeSwap and Uniswap. We've taken the best of all of them, and we've combined all of that to add an additional rewards to that from our Crypto-To-Fiat bridge. What's really important about the ecosystem that we're building is a fusion of three elements. We have basically the Crypto-To-Fiat bridge, which is funding a huge amount of the stuff that we're doing just because of the nature of what it does for the markets and the need for it. And portion of those rewards, up to 50%, are actually going back to the DEX, meaning that the liquidity providers and stakers are getting the rewards from that. And that's on top of the 50% that the DEX is providing just from regular swaps. So you have basically a liquidity, not only what we would want to call it once it rolls out and and has the amount of users, a liquidity juggernaut, but it also is you can call it a rewards juggernaut for users and liquidity providers. So those are the major, the core items. Now, there's some really cool items that we can discuss a little bit further, and that's the self-funding VIP pools and
Yeah.
ILP pools. And the self-funding VIP pools are basically, as they're mentioned, they're funding themselves. That's a really key and unique thing in the industry, because most projects out there are struggling to even open up a staking pool because they're out of money,
Hmm. Yep.
because of just the markets that is happening. So, in a sense, the self-funding pools are passively getting funded, partially from the bridge, partially from some of the stuff we're doing on the DEX itself. And it's a very unique technology. Up to between 80 to 100% APY is being provided to the users, and that's guaranteed. So that's really tough to do. The way we're doing it is I will just give you an example. A $100,000 liquidity pool over 12 months needs to have anywhere between 8,500 and up $100. So basically 8,500 and up dollars to be able to be funded fully throughout the full year. Just in layman's terms, on average,
Yeah.
right? That basically is approximately $200 to $300 per day that the project needs to come up with. It doesn't sound like a lot, but it does for projects that are struggling with the actual, movements in there, and just the volume that they're doing per daily. So the projects are actually going to accrue and buffer in credits until the pools are open for them, and they're guaranteed for a minimum of the period of 30 to 45 days. The what's beautiful about it is the bridge is actually funding continuously these pools. So as long as the projects are doing decent, not even they don't have to be doing great, but they just need to be okay and decent in their transactional values and the actual movements and what's going on. The pools themselves will actually just do their own job. And if there's even more movements in and people are cashing out and doing things, the actual pools are going to increase. So the APY will actually can go above 80 to 100% APY.
How do the impairment loss pools work within that?
Sure, yeah. So that's a secondary product that we're doing in addition to this. It can be combined, but we're simplifying because for self-funding pools, they're mostly a stake and just earn, regular. No, not, you don't need to be like a liquidity pool, so to speak. It could be even married into that. The ILP pools themselves work in a sense where we're providing about 10% of the from the baseline. Let me kind of revert back to that question and answer it better a little bit. The actual percentage, the actual money that gets put in by a user or a liquidity provider, ideally wants to be the same amount of money or the value that comes in and out, or at least the increase is same. The problem is that it never happens, because if you put in one token and the other, they always fluctuate in price. So you're always losing money. You're always losing money. But what we're doing is we're basically through the bridge and funding and in a specialty way of, I would call it redundancy pools behind the scenes that are going to be basically shown a little bit more and explained to the users. We're able to basically mitigate that by 10% minimum. So it might even go up from there, but basically we're offering it a 10% guarantee, I would say, protection mechanism. What that means in layman's terms is if you have a basement and you're basically are waterproofing it, we're waterproofing the basement. Now, if there's a flood and the entire house floods above, we can't guarantee that, but at least we're providing 10% from the baseline that changes. So if you are sending basically when you enter into the pool, 10% will within that difference between the two tokens, the 10% we're going to guarantee. That's huge for liquidity providers. And it buffers in a little bit more protections. They're not always looking whether or not they're going to be losing, I would say, their funds, and looking at whether or not they're making more money via, the rewards mechanism versus losing it on the impermanent loss.
Yeah. I was looking at the slide, so I understand that now, and now I see how it applies to some of the features. So transfers and ATMs, this is a comparison, obviously, with, I think the big ones, obviously, being Western Union and MoneyGram, but money remittance, pure, simple, transfer tracking, sure. Instant same-day transfer, my understanding is that Western Union is still offered that. You're claiming that they don't have instant same-day anymore?
They do, but they're struggling in that sense. What I mean by that is the regular money that people are sending. Typically, it takes a little bit of time to actually land, but it's not on a consistent thing. You have to pay extra to do those types of services.
It's a bonus feature. Okay. And then obviously cryptocurrency transfer, you guys being the one with your crypto-to-fiat move, which I think is going to be the brilliant. Do you think other major money market groups will start moving in this direction? I mean, if you think about what Strike has been doing, you look at Block and kind of where the overall systems are kind of moving, and we haven't seen anything yet on the consumer to consumer payments like Venmo and things like that here in the US. But I'm just kind of
Sure.
curious, if this really takes off, this could be the perfect replacement for those kind of markets. Do you see that as a market that would be addressable by you guys?
Yes, absolutely. I had a question about one of those. I'm not going to name him currently, but for example, uh, most of those type of payment processing centers, they're required to have a
Yeah.
bank account.
Hmm.
Number one, we're fully decentralized. You're your own
Yep.
bank. So if you have, I'm just gonna take my phone and show it. But if you actually have a phone and a crypto wallet, you're your own bank. We're
Yep.
banking basically on people that are in crypto to utilize the features that they know best, and that's basically mobility, having full decentralization
Yeah.
through the platform, and to be able to be in control of their own funds. I'm sure you've heard about, the recent news about, Coinbase saying that if they do go bankrupt, most of your funds will be gone. We can't even do
Would
that,
th-
even if we
would
wanted
that
to.
be would that I wonder if that would be applicable like in, non-custodial, like the Coinbase wallet. In non-custodials, essentially you are
Yeah.
in full control.
Correct, and that is really the most significant thing about this. Whatever you're sending, um, our dashboard, or you can call it our gateway, is acting more like a currently it's acting more as a payment processing center. In the near
Okay.
future, it's going to act like a online banking, meaning that
Interesting.
I probably need to touch upon this now, which is a very good intro into that topic. And that's basically that our system is going to not only have basic, it's going to have entrepreneurial level, corporate level, and enterprise. Entrepreneurial level will basically provide a scheduled payments, an extended history. Corporate will have all of those, plus this an ability to have a sub account. Let's say you have your accountant or somebody within the company that needs to do the payments, or that
Okay.
needs to land in different things. So essentially, we want this not to be used only for, hey, I just need to send I just need to send it once in a while. I need to send basically, I need to use this every day. And that's really what we're shooting for. We want people to use the services and the platform in an everyday basis. Just to say this, you are your own bank. We're providing a gateway for you to on ramp and off ramp money from crypto to fiat and vice versa in basically a seamless manner. And
I think
basically,
that,
we're giving people an alternative to
yeah, for sure.
Coinbase, Kraken, and the rest.
Yeah, well, and I like the component. Anytime that one can take control of their crypto, and it's what we kind of preach here on our channel, is the more self custody that you can get to, the better overall.
Correct.
Especially in markets like what we're dealing with right now. Especially if you're looking at crypto as a long term investment play, and in general, if you think like even my own habits, personal habits, is I've started to shift a lot toward crypto in terms of transactions, even though we haven't seen a ton of retail aspects to it yet, but we are seeing a lot of indicators that are kind of pointing in that direction with projects like AMP and Flexa. But there's a lot happening in this space. I want to get to your last topic, and that is SafeStarter. So
hmm
talk to me a little bit about what SafeStarter is. I was looking at it on your website. Explain it, and also how does it align with extended partnerships that you guys are putting together?
Sure, absolutely. As I mentioned, the ecosystem that we're building, or that we have been continuously been putting together, not an easy system to put together by no means. Most projects actually start with one product, and that's all they can muster. We've taken a long time to actually think about this process, how we can actually make it work, how we can put everything together so it can all make sense. SafeStarter basically is our launchpad. It provides fresh blood to the system, meaning that the projects that are coming in are both exclusive and partner LP projects. What do I mean by that? I mean that we have partnered up with some of the major launch pads. We're continuously adding more to the partnerships. I can name a few. We have a Synapse Network, Moonstarter. We're in talks with a couple other ones as well, and there's like 3 or 4 more that we have already onboarded. So we do have very good names behind that. The system works in such a way that basically the launch projects, whether or not it's a launch pad, most of the time they're going to be in multiple launch pads. Sometimes they're going to be launched exclusively on one. It might be incubated by another wing of that launch pad, meaning that it's an incubator arm of theirs. What happens with that is, especially in this market, projects are struggling, and even launchpads are struggling to raise money. So what's better than to band everybody together? And if they're raising, $500,000, we're going to provide a certain percentage on top of that. It's what we call a boost raise, meaning that when they're raising, we're going to provide a boost raise from our community, and the community will provide, obviously as a community, we're going to vote on which one or want to even, participate in one. In addition to that, well, obviously we have the regular type of, projects coming to us. But in addition to that, the system, how it operates and how we have our users participate in it is quite unique. We have basically a stake to participate, which is the regular kind of first come first serve kind of feeling of use that most launchpads have. I'm not the greatest fan of those type of systems, but they're there for a reason. Now we've added 2 more systems into this, and the 2 more systems are basically buy to participate. That's for people with deeper pockets. And what I mean by that is people that don't have a lot of time but do have funds do have adequate funds to be able to do this. Um, uh, what we do for that is we put a little premium on top of that. And so for every dollar that they put in, we put a 25 cents premium on top of it. Why do we do that? Is because they're only participating with money, but they're not basically propagating that project or helping that project spread the word, right? What we do with those extra 25 cents or the 25% that we put on top of that is we give it back to people that we subsidize. And that's the last group. It's called basically engage to participate, meaning that those people have more time. They might be really good people, people that are tweeting out, messaging people saying, hey, this is a great project. And we're subsidizing a little bit some of the stuff that they're doing. With that in mind, those people will get a subsidy that's been basically from the premium, and everybody wins. The project gets more users. The word is spread more about the project. They do get the proper funding, and we have 3 different elements that we can provide them with the project. Now, any of those 3 elements that we have, we can either use it immediately. We can say we're only going to use this type of raise factor for this project, or we can do a mixture of them. So by no means are we're very flexible. By no means are we stuck in one process. Typically the ratio between those is 50%, 25%, and 25%. So meaning half it's stake to earn, half it's a quarter is buy to participate, and then a quarter is basically engage to participate.
Right.
So.
Okay, so I when I look at projects like this, is one of the key things I'm, kind of always thinking in the background is what is the vein or the track to adoption for crypto in general, because payments are going to be one of the key components. Well, I think it will be the component of seeing mass adoption, especially a bell curve type scenario. And people have talked about this, analysts on our show and many others, really kind of leaning into these emerging markets is kind of the place that all of this is going to happen. What you've seen with what happened in El Salvador with Strike, the evolution of what we'll see in a nation state kind of shifting to that. Obviously, with what you guys are doing and many others that are kind of pointing in this direction of just being able to get into these cross-border payments that are somewhat fully controlled and fully decentralized, which I think is going to be the killer app here for kind of the unbanked and really maybe the banked in the coming years, because I think a lot of people will start to slide into, much like the habits of my own process in my own financial side of things, is I'm moving more and more into decentralized finance and then also in non-custodial access. So I've got full control of it. So I'm really interested in how this is going to roll out for you guys, because I think the market is huge. So it's good to see that you are there. Do you see someone like a Western Union, or if you look at Stripe or some of these other big companies that are starting to try to go and move in these spaces? What will that look like in the next few years for SafeGram? Where do you guys think you're going to be?
Well, I think we're going to be somewhere in the forefront of this, hopefully the leaders of it, and continue to be so. A couple of years back, people were happy to even have a T+3, T+2. Now we're getting to T+0, and I'm sure most of your audience knows what I'm talking about. We're basically, we can land the money on the same day. So essentially, we're at T+0. Obviously, we do buffer in a couple of days because we're dealing a lot with the centralized systems as well. So we have some things that are limiting what we're able to do just because of the nature of the entire monetary global system. But aside from that, we can, we're compliant even with that if we need to be.
Do you think, sorry to interrupt, do you think though, what you're talking about when you talk about T+0, getting into the transaction speeds in which we're kind of talking about, because you're right, that is that's a big benefit if you're looking wallet to wallet. It's almost instantaneous to a certain extent, much faster than Zelle or Venmo. I just did a Zelle transaction the other day. It took 3 days to clear it. But at the same time, Zelle has done the integration into banking systems. Do you think that there will be partnerships in the future where SafeGram would be able to offer a Zelle-like service to financial institutions for movement of money?
Yes, absolutely. I wouldn't name some exchanges that we're in talk to, but we do have conversations currently with some major exchanges for some off-ramping solutions.
Interesting.
For them. And
cool.
that in itself is a huge, kind of thing. And I'm just kind of saying that out there for the users so they understand the implications of what this type of service can provide. So this isn't only for a regular user, it's basically for big players. We're on our, just so people understand, when we do say on our documents that we don't have limits, there is a limit of about 100 million, but we're able to basically push 100 million and above, up to 100 million in one shot if we need to.
Yeah, this is kind of a ripple for the masses, really, if you think about it.
Small and big.
Yeah, for sure.
Absolutely. Yeah.
Ivan, hey, it's been great having you on the show today. Thank you so much for stopping in. We appreciate it.
Thank you so much.
Excellent. All right, so if you guys want to learn a little bit more about SafeGram, we'll drop some links below. There's also some more information on SafeGram, kind of how it works, how to get to the Gram token, all that kind of stuff. We'll leave that in the description. If you are listening to the podcast side of things, make sure and jump over here to the YouTube channel. This is where you're going to catch all these interviews, a lot of our analysis, and much of our deep dives all happens right here on YouTube. Make sure and jump into the Diamond Circle too, because we've got some really cool stuff happening. We're launching a new Luna tracker, got a lot of new stuff that is only Diamond Circle, so make sure and subscribe. It's absolutely free to you. If you want to reach me, it's out on Twitter @Paul Barron. I'll catch you next time right here on TechPath.